It's a pleasure for me to be here today once again. We have a presentation that is full of information today. We will see more slides than in other sessions, but we will try to share them really very quickly, not to try to explain so much in each one, but I think that there are important issues to take into account before chatting, before starting a conversation with the funders. Now I will share my screen. Rocio, do you confirm if you can listen correctly? Next week, we were talking about how to design the plan, and we have also talked about the importance of clarifying how much finance do you need, how much funding do you need. We also talk about, not a lot, but how to assess the loans, the investments, to see which are the stages for financing and what we can see in each stage. We will try to find the logic behind of payments and to try to see the financing for the different types of funders that we can find. Rocio, I know that the BID is doing this analysis now, and we will try to see, and you can share.
Yes, Connect Americas has a section of financial services that is a unique spot where you can verify the different services available in your region. At least the ones that we have had previous discussions or that we have had a thorough survey of all of them, such as banks, fintechs, at a regional level. So we are trying to pull all that information together so that we can share with a group of Connect Americas. And also you will have the opportunity to easily spot which of these programs are aimed to address women-owned business. So once we have that information available and online on the website, we will let you know. Thank you. And also it is really interesting because this online information gives you the possibility to analyze it at your own timing, perhaps a month, a year later. So I want to tell you that even if you are not yet ready to ask funding, but if you are considering this option for later on, you will have the possibility to access to this information.
When we are talking about, for example, capital, financial capital, to think about the preparation for the funding, for additional funding, for asking for additional funding, you need to find early signs that regarding funding risk. Why for you it is important to structure or to plan everything? For the funders, as I mentioned, are going to see behind this, which are the key questions that the funders make? Which is the charge, the total expenditure of your debt regarding your annual revenue? Which percentage of your monthly income is designated or is used for payment, for repayments? And are the repayments paid with the work capital or do they depend on your future sales? All of these will decide what the funding is going to do. They're going to make a total analysis of your business plan, of your funding projections, of your cash flow projections, and they will see also your KPIs, your CAPIs, and sometimes the answer to a question is not so clear. I don't know how to say this, but it's not that you're going to receive an answer of a no regarding this question. Maybe you can receive a no as an answer, but you can look for other funding. Now I want to share a small template. Yes, I will close this. Let's see where the template is. Let's find it.
Estos KPIs o KPIs
These KPIs that we can see here are not the only ones, but are very important KPIs for the funders to determine the healthy of your company, of your business. And you can use them also to determine how your company is working, which is the net income margin. And here you have the estimate, the form you can use to find that. You can see the percentage, you can see the reference part, and these are general rules. Maybe in your case would not be the same, the percentage that you need to obtain, but the funder can see the net income margin of more than 50%. These are rules that you can use. Maybe it depends on the different industries you're working on in different sectors. Maybe you can find other margins, other percentages that are used, but these are used generally speaking. You can also see the income installment relation on in the month installments of the loan that are divided through the month revenue, and also with the corresponding percentage. Not more than 30% should be used to pay your debt. Up to 40%, it's okay. You need to think also about the liquidity, about your cash flow. Also, you need to pay that into to take that into account. Yes, it's better now. You can read it better. But remember that we are going to go through this also in the academia of the IDB. What we see here is a cash, say, amount, how to which are your main clients. If your company depends more in 70 or 80% of your revenue, or if it depends on 2 or 3 main clients only, therefore your risk would be higher for your funder. If we look at the service of covering the debt of which is the index that will cover your debt. This KPI is really very important for your funder. They almost always use this figure. Point 2, for example, as a minimum ratio to find funding. If you have not estimated this, if you did not calculate, please do this. Please try to find this index for your company in order to determine in your when you are asking in your applications for funding, if you have enough money. This shows if you have enough money to pay it back, to pay back your loan. And this has to do with the this ratio gives you the idea if you can pay in the short run, in the short term, and if you have the capacity to cover your immediate obligations. This KPI index will are used by many funders and will help you prepare to ask for a loan.
Esos son los
Okay,
KPIs y la
these
explicación
are the
aquí
KPIs,
dada
and
por
then
la
next you
revisión,
have the
porque son
explanation
importantes para los
that
financiadores
says why these
determinadas
indicators
necesidades reales.
matter
Bueno,
to
pueden leerlos
funders.
y
You
pueden
can
verlos
read
también
them all at your
en
own,
la plantilla.
pace
Hasta
in
ahora,
the
¿es que tenemos alguna
template.
pregunta?
Do we have any
¿Otra pregunta?
questions so far or any other? I have a lot of slides that I want to share with you, so we can now go to the breakout session, and I would like to share with you a case study so that you can work on that during that time. And the thing is that you to try to review the KPIs of this business, to try to identify key risks and what would need to change before approving new debt. What are the key questions here that you need to try to answer? What concerns would a funder raise based on these KPIs? And also, what should the entrepreneur do before asking for more debt? We will try to answer all these questions and providing a briefly explanation. We will share all the results by the end of the session.
Let's continue. I will, the funders, what they are looking for, I only put it here, only the funders. Sometimes I only put it funders in masculine. Maybe if they are feminine, they can give money to women. Here we have a reliable history of sustainable margins. For example, you have a diversified revenue base. For example, if you have a very important client, or you follow or you see which are your forecast sales or what happened in the past, what if the same thing doesn't happen, what has changed from the past. You need to remember that you never, never, never can ask for funding to pay salaries, to pay your employees. You need to have a clear repayment account. What your business is, if your business is losing money, what is happening? And you need to solve it. So what we are looking is that sustainable margins, repayment, reliable background, diversified revenue history, and also a capacity to absorb the repayment shock. And for example, if you used funding in the past, what has changed in your business? Something important for you to remember is when not to get debt. If you're asking for funding to pay salaries without income at site or in the future, to ask for a loan. And now what we can see, how can you determine if it is a good decision to ask or to get more debt? I have 5 steps here to see which is your charge. The first step is to check your debt right now to project sales and income to estimate the coverage service of debt ratio, and also to put into test your possibles, what will happen, to make a stress test and to analyze your alternatives, to see which is your income without your expenditure, and to see if the cash flow is really low, the risk will be really high. And the second step has to do with forecasting, or making a project, or thinking about your sales and your income for the new loan. You're going to estimate the additional income and the associated cost with that. For example, it will be the staff cost to employers, or the general expenditures, material, raw material, and to also see if your extra payment is going to be higher than your debt. You need to calculate to see which will be your income. This future income will determine if it makes sense for you to get another loan, an additional one, or not. What I mean is that you don't have only the option to ask for venture capital. Maybe you can look for an investor, look for investment, for example, angel investor, because you maybe can think that you can obtain free money. You need to assess every option that you have, and to try to think if it makes sense for you to have an additional loan. The third step is calculating or estimating the ratio. This is a formula to try to see if you have available cash to pay that debt. Sometimes the banks want to see the amount of 1.2 ratio. What does this mean? This means that you at least have 20% more of cash of the needed one in order to pay the debt. So if you have more than one, you will be able to pay this debt in a comfortable way. When we talk about stress testing, what is that, number four? What will happen if, for example, if this happens, if you think that a loan will help you to increase your sales, to double your sales, or a venture capital investment will help you to make this expansion, this growth, a big growth in the market, what will happen if this does not occur? For example, instead of duplicating your sales, you just receive a 25% of growth in your sales. Maybe your clients are not paying, or they, for example, they do not comply with your dividends. If you have an investor, if you see a decrease in sales, this means that if you have a decrease in sales, and it means you are not going to be able to pay your debt, this is a very risky scenario. This is a possible scenario, but you have to think about it. If it can happen, or maybe it cannot happen. If I think about the future, I need to try to think which will be the consequences in my funding projections. Maybe your scenario, your base scenario will be to double my sales. What will happen if your sales increase in fourth? What will happen? Will you invest that extra amount of money in machinery, in more employers? What will you do with that? You can play with this and try to see which will be the total amount with which you will count on, will the money or the amount with which you will feel comfortable, and also with what amount you're going to be asking for with a loan. Maybe you can find other alternatives. For example, in number five, we can say there you can ask for a smaller amount of money, smaller loan, or maybe you can negotiate better credit terms, or with other vendors. Maybe you have different options. Do I have these different alternatives? We will show them in the slides for next week. Now, just one advice. Take debt if the revenue it will be higher than the initial payment. You need to maintain a DSCR higher from 1.2, even in a testing scenario, and to see if the loan does not push your total debt to a level that you cannot manage, for example, 30-40% of the sales. Not only look in the sales growth, not only in your business growth, but in the true test if you are reliable, if it makes sense for you to take a new loan, if the cash flow after this growth will cover in a comfortable manner the new debt. In that case, if you can do that, there's no problem.
So are you ready for more funding? Once again, we should review all these key questions just for you to know why do you need this funding, how much, why, can you repay or deliver returns without financial stress? Will my financial indicators support this request? And have you proven that you can use the money well? Uh, if you can clearly explain what your intention, what your intentions are with this funding. If you are asking the right financing type, I would like to talk a bit about capital equity versus loans. Last week, someone shared their experience with a venture capital, and I think it was last week that at least one person mentioned that they were averse of taking risk.
Up very quickly. I will leave you these slides of the presentation so you can check them, to read them once again, to see what I'm going to mention now is the mixture of funding is a key point. There's a difference in layering and what we see over here, stacking. It's different to talk about layering and stacking. This layering has to do with the strategic sequence and complementarity. It is like a ladder, what we do here. You try to look for funding for expansion. For example, you first get a grant, for example, and with this type of funding, you reduce the risk. When you completed this stage of innovation, you will look a short-term loan and you will use it to finance your work capital. Then you will use this reinvestment in order to strengthen the basic operations. And if this doesn't work, then you will have the chance to escalate to ask for a risk capital in order to expand to other markets. You need new markets. When we're talking about stacking, this is a redundant or excessive fundraising without clear logic. This is something that the funders also will analyze in your business plan, in your funding plan, in order to see what you're doing or what you do and how you do it. Do I see you, Angela? Some examples of stacking. You're asking for funders, loans, investment, only in order to scale. You don't have a clear logic behind why you will need this grant, why you will need this loan. when you talk about combinations of both different types of fundings, try to use these funds for
Si te puedes devolver
uses
un
that are
momentito
not
a
the
las
meant one.
fases de
Angela,
estimación
what
de
do you
aprendizaje
want to
libre,
say? If you can go
presentación
back to
anterior.
the
Tú ahí
stages
pones esos
regarding
cuatro
the
puntos, ¿no es cierto?
laying,
Pero en mi caso particular,
these
yo
4
tengo,
points
digamos,
are
unas
the ones
cuantas
that you're
tendencias en
mentioning.
el nivel
For
2.
example, in
Este sea
my
el caso
case,
del
I
nivel
have
2
a
particular.
intermediate
Yo estuve, por
stage
ejemplo, en
between
una
1 and 2. For
subvención
example,
de proyectos
I had one grant
para
for
hacer
one project
montar todo lo que
in order to
teníamos
set up
de milpueblos.com,
whatever
que es
what
nuestra
we had
plataforma
in
justamente que conecta a oferentes de mil pueblos de
1000towns.com.
Colombia
It
con
connects
experiencias
different
turísticas y de productos relacionados con esas experiencias
different people that is
directamente con
offering
sus clientes, que
within
son compradores, que conocen
Colombia,
justo,
sharing their
responsables de
experiences with
servicios
other
sostenibles.
clients,
Y lo que hicimos
with
fue montar toda la plataforma,
other
hacer un proyecto
companies.
piloto
What
con
we
unos
did is
oferentes,
set up
entonces
this
montamos todo un
platform
proceso de
together with
formación y demás para
the
fortalecer sus capacidades
offers,
para salir
together
adelante.
with the
Pero hasta ahí
clients,
llegó la subvención.
and
Luego
strengthening
nos
their
pasamos a
capacity.
fase de
Up
venta.
to
Ese es
that,
el
after
punto
we
2, todavía no lo
finished with
alcanzo.
this
Te quedo
platform,
en estoy en
we
la
didn't
justamente en la
have
pregunta en este
anymore
momento de,
the
bueno,
funding.
¿qué hago? ¿Saco
The
mis
grant
ahorros y empiezo a
finished.
contratar
So
gente?
now
Porque yo
what can I
necesito
do to
obviamente
continue
pues gente
working?
que
Should
haga las
I get
cosas para
it
poder
out
empezar a
from
vender.
my savings
Y me
or
voy a
to
riesgo,
ask
lo
for
mío, me financio.
more
No sé si hay
risk
alguien más de
capital
esos
from
módulos o así,
myself,
pero
or
digamos que en mi
where should
caso
I
hay un
ask
paso
in order to
intermedio.
keep
Yo no sé en
growing?
este
So I
caso
think there's
cómo podemos
an
evaluar
intermediate
nuestras
step between
opciones
1 and 2. How can
y
we
si aplican los otros
assess the
indicadores o no cuando
options?
pues todavía no hay
If
venta.
this corresponds to what I'm mentioning right now, if for example, the thing is that I don't have sales yet. If you see that, maybe there will be another stage there. You need to try to understand why, for what do you use this money? The important part about layering is that you use the money in a ladder way, like step by step. This is the logic behind the funding logic. In your case, I don't have the answer in this moment, but I will try to make a small analysis and give you an answer to that next week. Jimena, what do you want?
Sí, o sea,
You
bueno,
have
yo
another
me siento
question?
muy
Yes,
identificada
of course.
con el ejemplo
I'm
de la
really
aplicación, que es lo
identified
que
with
vamos
this
como
example
apagando
of
estos incendios
um,
que se van presentando
with the
y no
stacking.
hay
We are trying
como
to
una planeación
turn
estratégica,
off
una
these
planeación financiera
fires that we
estratégica,
are facing, and
pero
we don't
no,
have a
o sea,
strategic
la mente puede decir,
planning.
¿por qué
We
no
don't have a
hacemos esa
strategic
planeación
funding for the
estratégica?
future.
Pues de
So
alguna manera
trying to
no lo
think
sabía, o
why
sea,
didn't we
como que
have a
iba
strategy
aprendiendo en
regarding
el
funding?
camino y
And the
ni siquiera sabía que
answer is that I
tenía
was learning
esta lógica
on the way. I
financiera,
didn't know about this
no sé, siento que
logic,
tener,
about
si
this
hubiera
funding
tenido
logic.
alguien que
If
me
I
mentoreara,
had someone
hubiera sido de
before
mucha
that
ayuda para no
would
dejarme
act
de
with
esa
me, would
manera
work
como
with
tan
me as a mentor, that would help me, I would not have tripped over so many times. Yes, sometimes
ya
we
no podemos
understand that
cambiarlo
happens, but the past is in the
y creo que
past.
es como decía
We are not
Carmen,
able to change it right now. So we need to think about the present and the future. For example, we mentioned previously these 3 couples that we chose incorrectly, and it was not the final couple for ourselves. Maybe for the future you will find another couple, the best couple for you, with all the knowledge that you have. You have learned a lot of your mistakes, of your flaws. You have learned, and you will apply all this knowledge towards the future. I'm so sorry that you had to go through that, Catherine, and the same for you, Jimena, but I'm sure this will help you strengthen your company, your business in the future. Please try not to stay in the past. You have to take what you have learned from that and go on. Thank you. Let's see. So the last slides I will give, we will talk about funding health has to do with resilience. As we see, this has to do with the consequences, the funding consequences from the company. And we have to to play a bit with the different scenarios that are possible. Which are the consequences if this happens? What other consequences will happen if we have another scenario? Try to strengthen our application in order to improve your pitch when you're talking with the funders. And you have to think about the logic of repayment. Where does this come from? To think about your KPIs, if they are from your funding projections and your cash flow projections. Is it related with that, your repayment, or your business plan is alienated? It doesn't have anything to do with what you're looking for in your company and what you're asking for regarding funding. So you need to also see which is your potential risk. They try to look in the future. Don't forget that the banks or the funders, the product that they are selling, what they are selling is money. This is their product. So they need to see which is the risk of repayment. For example, the banks, they have an interest rate that you need to pay. They assess that risk for their own company, not for your company. So the key question would be, which is your which are your everyday finances? That is what you need to answer. Rocio, we will have another session next week. I would like to ask you to confirm the framework for the future and that to you will have some place for other representatives from two fintechs that are possible funders, and one will be from two from fintechs and one representative of the traditional banks. Yes, we will have a meeting with them. Please prepare one or two questions that would be crucial for you, that would be very important for you to ask them to these funders that we will meet, to try to chat with them and try to ask them and to try to find more information and to strengthen, therefore, your future application. Before next week, try to see the KPI template that I will show you in the academia and try to see with these possible conversations with the funders. First, try to build your cash flow projections. I think I've shared already some of this information in the Tuesday session. I will share this template for the cash flow. If you don't have it, please tell us about it so we can share this template with you.